Good evening, everyone. Welcome to IQI Canada Evening Talks. My name is Yousaf Iqbal, country head of Juwai, IQI Canada. I'm back with one of our favorite sessions, which is the economic update by none other than our chief economist, Shan Saeed from Juwai, IQI. Good morning, Shan. How are you doing?
Good morning, Yusuf. Thank you very much. Thanks for having me again.
No, thank you, Sean. Really appreciate your time. I know that, I've been watching you lately, following you up your LinkedIn, following you up on Facebook, which I always tell people to do it. And I can see that Sean is not only just, just you're all over the media. Apart from that, also, I see that you have been traveling. And I know recently you were at IQI Cambodia and you were in Cambodia. So how was the experience in Cambodia, Sean?
Yes, Yusuf, my experience in Cambodia was fabulous, I must say. Chandi, the country manager of IQI Cambodia, he was a great host and he really took great care of us. I went with Dave Chong and with Debbie, Dave's wife, and Grace from Mikey. So it was a good experience. Country is booming. The moment you step out of the airport, you can see that infrastructure investment everywhere going on. Construction is in a boom. You can find a lot of investors from China, Japan, Korea, US, Malaysia. So everybody was there. So it was a good experience, eye opener. Uh, I was staying in the center of the city, and I normally get up at 5 o'clock in the morning, uh, KL time. So when I got up at 5, even on Sunday, you can see the traffic rush. So
Wow.
when you have a traffic rush, that really tells you that there is a lot of boom in the economy. People are out there. Everybody was out, and as you know, there is pulse of the economy. There are three variables. Number one is restaurant business. Number two, car sales, and number three, energy consumption. So restaurant 80 to 90% full. Even on Sunday when there was an event book launch of Chandi,
Wow.
restaurant 90% full. Lot of cars, lot of reconditioned cars moving from US to Cambodia. It's a left hand drive, it's not a right hand drive. US
Okay.
dollar is used, and energy consumption is on the rise. A lot of tourists are coming back after post COVID. You can see tourists from China, Europe. It used to be a French colony, a lot of French influence. Overall, beautiful country, lovely people, very friendly. So I have really fell in love with the country, and I told Chandi that I'm coming back. So overall, I can see that people are talking about 10 years ago, nobody knew about Cambodia. Now everybody knows about Cambodia. People are talking about 10 years. I'm saying in the next 5 years, Cambodia will really turn around. A lot of international hotel chains are coming over there. So that shows, that country has got a lot of potential. A lot of tourists are coming. It's a beautiful green country, and I think Chandi has done a good job in promoting IQI and the way IQI Cambodia is moving. I wish them a good luck.
Amazing, absolutely. Chandy, thank you so much, Sean, for that update. Talking about Cambodia, interestingly, that I was talking to some of my agents and their investors just about a couple of weeks ago, and Cambodia was definitely on the radar of people looking at the Cambodia from that perspective. And we are actually in touch with Chandy, and very soon we'll be talking about a project from Cambodia as well. Again, as you rightly mentioned, because there's a lot of activity happening around. People are dealing in US dollar currencies, which is again not a currency hedge or a currency risk on that, and that makes a very big difference as well. So yeah, definitely looking forward to get more information on this. So I'm so happy to see that you had an amazing trip in Cambodia.
Good time in Cambodia. I enjoyed it. My 3 day stay in Cambodia was very good.
Lovely, amazing. So, Sean, I was just reading through an article, and I just thought I'll just share this with my audience, and before I go to my question. So, this was reported in the Wall Street Journal. They ran a piece like how previous generations handled inflation crisis, which came on the July 30th, 31st of 2022. Since World War II, U.S. experienced three great inflation, that is from 1946 to 1948. We started from February of 1946. 1974 to 1975, we started on July of 1973, and 1979 to 1981, we started from April of 1978. The 18.1 inflation rate in December 1946 remains one of the highest recorded in the USA. Wall Street Journal dated July 30th, 31st of 2022. Recession and inflation are eroding, the money of millions. I mean, look at the Eurozone, the recession fear grows as business activity declines. According to the latest report from Financial Times newspaper dated August 23rd of 2022, mentioning Citibank UK inflation would touch about 18.6% in next January. So the question in everyone's mind is like how to handle inflation to make smart investments and decisions and to move. I mean, this is a concern which I have for my investors as well. So, Shan, to my first question, like it's happening in advanced economies, stagflation, recession, and higher global debt, supply chain hiccups, and above all, uncertainty in the global economy. What key lessons the consumers can draw from the experience of advanced economies, and how effective is the monetary policy?
Yes, Yusuf, I think you have picked a very right article for the current situation. Not only you, but many people are asking what is the solution to tame inflation, how to control inflation. It's a very difficult uh, question to answer because inflation is something, once it hits the economy, it doesn't go away overnight, it takes time. And what we are witnessing right now, post COVID situation, uh, in my opinion, inflation will stay very high because if you have witnessed, oil prices are on the upsurge again. Many people were saying $70, $50, $40. I said no. If I have made a statement yesterday, day before yesterday, when I was invited at the book launch by Chandi in Phnom Penh in Cambodia, I was talking to someone. I said this inflation will remain serious and it is stubborn. And the only way forward is that central banks they have to increase interest rate. So once you increase interest rate, it makes an impact not overnight, not in a month or 2 months time. It takes good 12 to 15 months for that policy lever to make an impact. And what central banks are doing right now is the perfect solution. You have to increase interest rate. You have to reduce monetary deflation. That is, you have to reduce the velocity of money, the number of times the cash it changes, from time to time. That creates inflation. So I think what central banks, as of now, when I speak to you, 80 central banks have increased interest rate this year, including Canada, including US, including Pakistan, and many other countries in the globe. So I think monetary policy will make an impact. It will not happen overnight. It's a long haul. So how people protect their wealth? This is a key question. And when I was speaking on Sunday, I said, if you have invested $100 and that $100, if it touches 102, it means you are on the right track. You are making the right investment portfolio strategy. But if your $100 goes to 99 or 98, you need to step back. You need to revisit your asset portfolio strategy and see where did you go wrong. Because if you lose your wealth, that is not smart. But if you can increase your wealth, if you can protect your capital, that is smart. So right now we are in a situation where wealth preservation, where wealth protection has become very important. If you can protect your $100 in these turbulent times, in these tempestuous times, in these uncertain times, I would say that you are very smart. But if you have lost your money, if you have lost your capital, and your capital has gone down from $100 to $98, you're not smart. So, in order to play smart, first of all, you have to get as much information as you can. Talk to your peers, talk to your friends, talk to your bankers, read the newspaper. I read Wall Street Journal and Financial Times every day. I am so happy that you have started quoting Wall Street Journal. At least I can inspire. I am with IQI for the last 9 years. Not many agents or people will read Economist magazine or Financial Times or Wall Street Journal or Harvard Business Review and daddy read da da da. But now people can read and they can understand. Now with the help of internet, so many things. If you don't understand, what is stagflation, what is recession. You just Google search, go to Investopia. You get to learn so many things on your own. You don't need to go to school, or you don't need to go to university. So I think, in my opinion, this uncertainty will stay for a very long time, and people, they need to understand that how to protect your wealth. You need to gather information. Once you gather information, you have to see where do you want to go. So you have to ask three key questions. What is my risk profile? Am I aggressive? Am I moderate? Or am I risk averse? The second question is, what is the risk reward ratio that I'm looking at? I want 20%, 30%, 40%, 50%. Nobody can give you 20%, 40%, 50%. If you can make single digit, 2, 4, 5%, I think that is good enough in these times. The third most important question is, what is your exit strategy? When do you want to offload your assets? You cannot stick with your asset for the rest of your life. So you need to have a time frame, whether I want to buy this asset for this year and then I will offload after 5 years, 10 years. I am investing this amount for my son's education, for my daughter's education. Okay, my daughter is 13. After 5 years, she will hit the school, she will hit the university. I need $50,000 or $100,000 or whatever. And once my daughter reaches over there, I will offload my asset, and the profit that I'll make, I'll give it for my daughter's tuition fees. So you need to ask all these questions. So this is not a normal time, I would say. This is very these are hard times, and in hard times you need to revisit your strategy all the time. Don't follow anyone blindly. You have to be very, very careful. Do your homework. If you have made money in equities, stick to equities. If you have made money in real estate, stick to real estate. Don't follow the crowd just because somebody has told, oh, I made 100% or 200%. No, no. In these times, nobody can guarantee you 50%, 40%. If somebody is saying he is taking you to the wrong corridors, you don't have to go to the wrong corridors. You have to stick to the basic, and you have to protect your wealth. So my understanding from your question is, yes, monetary policy will make an impact. Stagflation is here to stay. Recession is already hitting many economies. And my advice to many investors is, stick to the basic, and you will never go wrong.
Very, very well said, Shan. Stick to the basic. That's the key point from you. You mentioned a lot of important points here. That stagflation is going to stay. The interest rate is going to continue to go up. Again, it's very important, right? You rightly said, is to even talk to the people, and also talk to the experts about it. As you rightly said, not necessarily that just don't follow the crowd. It's not like if something is working out for someone, it's going to be something same for everybody. Everybody has
Exactly.
their own personal situation. You very rightly mentioned, if you want to really secure your $100 and make it $102, and what kind of possibilities are you looking at? Are you looking for in terms of of using it for your daughter, for your kids, for your education, things like that? That's how the planning needs to be done on that. So yeah, I mean, you just answered my question very, very well. Thank you so much for that. So it brings me to my second question. Investors have lost more than 47 uh, trillion dollars in equity market globally. Now bond yields are rising amid a hike in interest rates. Which asset class should investors follow in order to comprehend the markets and their forward outlook better?
Yes, Yusuf, markets are very, very bad. You saw investors lost 1,000 points. The markets lost 1,000 points in one day on Friday. And year to date, investors have lost 47 trillion. T for trillion. It's not a small amount. And we have seen investors have made some wrong calls. At the start of the year, I still remember the yields, the T bills, the UST bill 10-year treasury was trading at 1.55. Is now trading at 3.09, almost 100% increase. So I was talking to some of those investors, and they say, "Oh, with a rising interest rate, the equity markets will not uh, will not have any impact, and no, equity markets will continue to boom just because in 21 the equity markets boom." So you cannot expect markets, if they have boom in the past, they will have the same boom time in 2022. And you have seen the markets are really in a very, very bad shape. And I was sharing Cambodia on Sunday that Fed will continue to increase interest rate. And just in 8 minutes, Jackson Hole's speech by Fed Chair Jerome Powell, just in 8 minutes, investors lost $78 billion. B for billion.
Wow.
Imagine. In 8 minutes, people like Warren Buffett, Mark Zuckerberg, and many top notch people, they lost their wealth. Only in 8 minutes. The message is from Jerome Powell that Fed will continue to increase interest rate. And when interest rates go up, equity markets go down and the bond yields go up. We have been saying since 20 February 2020, yeah, February 2020, that bond is the worst asset class to be in. In 2 months' time, the bond market has turned around. Now everybody is taking position in bond market. They are taking position in real estate. I'm not the only one who's saying Qatar Investment Authority, GIC of Singapore, Harvard Management Company, the Harvard Endowment, they're all going into real estate. How can you go wrong? These people, when they invest, Qatar Investment Authority have got more than $600 billion. They are making massive investment in London real estate. They are making massive investment in Tokyo real estate. GIC of Singapore, the sovereign wealth fund, taking position in rental market of UK housing. There are so many students studying in UK, they need housing. So the rental market is very strong. They are going in there. So all these sovereign wealth fund, family offices, hedge funds, when they come in, they come not with $100 million or $200 million. They come with 3 billion, 5 billion, 10 billion. So it's a huge amount. So I think investors they need to follow what several sovereign wealth funds are doing, what endowments are doing, what pensions, Ontario Pension Fund, CalPERS, California Pension Fund, what they are doing, what Norwegian sovereign wealth fund is doing, Kazakhstan, Saudi PIF, Public Investment Fund, Saudi Public Fund Investment Fund is interested in taking 25% position in Heathrow Airport. Imagine you have 5 terminals of Heathrow, one of the busiest airports in Europe, and they are interested. Why? Because the cash flow is coming. It's all about cash flows. So when these sovereign wealth funds or pension funds or endowments or institutional investors or family offices, when they come in, they look at one thing: is my cash flow strong? My cash flow is secured in future, and that's how they make the investment strategy. So when investors they come in, they look at my forward cash is secure or not. If my forward cash is secured, customers are coming in. I can tell you, Phnom Penh Airport flooded with people, lot of investors. So your cash flow is solid. Everybody's buying anything from duty free. So same goes for all these investors. Look at what the central banks are doing. Central banks will continue to increase interest rate. So which asset class to take position right now? Bond market, real estate, because we are back in 1970s. In 1970s, people took position in two asset classes: real estate, commodities, and took some position in bond market as well because the bond yields were rising. So the question is, how do I position myself? So as you made some comments, investors they need to understand what is my risk profile, what ratio or what is the profitability or what are the returns I'm looking at. And third, my exit strategy. So if you can define these questions to yourself and if you can write it down, you can never go wrong.
Thank you again, Sean, for this. Very again, you rightly mentioned on that. Now, talking about a little bit about the interest rate, and you're saying that interest rates are going to be on the rise, and I'll come back to that, a little later on in asking you for the interest rate outlook on that. But it seems like right now what we're seeing is that the interest rate will continue to rise on that. You just mentioned something about let's go back to 1970s when you're talking about that which asset class came as a winner on that. Now, period from 1976 to 1981 had a lot of hiccups in the market. Would you elaborate on that? And in the current situation, I think which asset class remains on investors' portfolio? You just mentioned about bond and real estate. Is that what we should concentrate on? Is there something else on that? And just give me a little elaboration, especially what happened in 1976 to 1981.
I'll start from the bottom. The question is, do you want to have peace of mind or do you want to have sleepless nights?
Yeah.
If you want to have peace of mind, go into real estate. You will never go wrong. You can touch the walls of your house. It is yours. It is not only yours, your children's future. So protect your children's future. And to protect your children's future, your family future, you secure your cash flows, go into real estate because that is tangible asset. I was surprised 2 months, not 2 months, a month ago. I think either it was Wall Street or Financial Times. I don't remember. There's so many data is in my head, but sometimes I can't really get the data out of my head. They talked about tangible assets. In 1970, everybody was going into tangible asset because there was stagflation, and real estate and gold emerged as the key asset class, the winners. So gold, silver, arts, farmland, uh, real estate, these were the asset classes that the customers or the client, the sophisticated smart investors, they were interested in. So I think we are back. History is repeating after 52 years, and this will continue for the next 2 years or so. So, as I said, you have to ask these key questions. Where am I going? How can I protect the wealth for my for my family and for my future generation? And if you can make smart move and you stick to basic, if you have made money in real estate, stick to real estate. Don't go to equity markets, don't go to bond market because you don't have expertise. But if you have made money in equities, stick to equities. Whether equity markets are good and bad because that's where your expertise are. It is just like I tell my son before the exam, don't touch the new topic. Whatever topics you have studied, just stick to that. Just make your preparation according what you have studied. Don't go to a new topic just because your friend is telling you, oh, Zedan, study this as well because this might come into the exam. No. If you have studied whatever you have studied in class, whatever you have prepared, stick to that. In the same way, investors, they should they should listen to our uh, talk, but they should ask themselves, where did I make my money? I made my money in real estate. Okay, I stick to real estate. I made my money in bond market. I stick to bond market. So stick to your basic. Do your homework. The most important thing that I can share in this talk is one thing. Please do your homework. Markets are very, very bad. Gather as much information as you can. Information has become a strategic tool. You and I have same access to the information, but the key is how to get the data driven related information. No fancy talk. At IQI, we don't do any fancy talk. Everything is backed by facts and figures. And when I was invited in Cambodia and I was speaking on Sunday, the crowd was really impressed because I was sharing data. This is what we said in 2020, July 21, about recession. So everybody can counter check you whether Shan Saeed is right or Shan Saeed is wrong. If I am wrong, I am very confident and very open in saying, okay, I made the wrong call. I am not an angel. I can go wrong as well. I am a human being. I can go wrong as well. And I have made some wrong calls. It is not whatever I say is 100 out of 100. No, it's not like that. So, in my opinion, if I can drive home one point to your sophisticated and smart investors in Canada, I would say gather as much information as you can. Information has become your strategic tool.
Very, 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 very well said, Sean. Information is very, very important, especially I really like what you said. If you're dealing into an asset class, it's very important to stick out to the asset class. Just don't go jump into from, whether you start trading into cryptocurrencies or get into forex trading. All of a sudden, because we see that's what happens a lot of times. People go away from the expertise where they made the money and they try to jump on it just because one market goes down, they think the other market is going to go up on that. So very well said. If you are into real estate, stick to your real estate. Work on your assets of it. And I always love what you say about tangible assets, especially when it comes to real estate, gold and silver, that you can touch them, you can feel them, and that's what we have historically seen as well. Just getting a little glimpse of the real estate market, and very interesting. I was actually sitting with one of my investors today, and surprising, like he invested into a pre-construction project, and I was just telling him, he's a very very good investor of mine. I was telling him this amount, how much the market is going up. He goes, really, Yusuf? This is what I invested up into it on there. He goes, oh, people are telling me I should not get into pre-construction right now. Something is coming 27, 28 is going to be. I said, listen, you invested just about 2 years ago into a pre-construction project, and when you invested with us, immediately after 2 months, the property already had a jump of $40,000. And now with all your experience, now you're telling me that. And he said, no, you are absolutely right. I don't know what I was thinking, what I was listening to other people on that. So there's a lot of time education and information is very much required to the people you're dealing with, because as you rightly, people are hearing all these noises coming along on that. But that's where I think the expertise comes in. That's where IQI comes in. As you said, there's no fairy tale stories. It's all about backed on facts and the data. And that's what we do here at IQI Canada as well. We make sure that when people are talking to us, we give them facts and figures. And and gentlemen today, my investor was like, oh wow, you're right. And then believe it or not, after I shared something for him for a new project coming in, he called me in the evening after we met on the lunch. He goes, Yusuf, you know what? I just wanted to understand again, how much did we invest and what was going on with my property? I said, you haven't got your property yet. This is what you made. He said, okay, I'll be flying out in a couple of days' time. Can you please send me some information about the project you were talking to me about? So again, it's not anything. It's about the facts, as you rightly said, and giving them the facts on that. Uh, Finally, Shan, my question is like, what Canada investors should analyze, considering and preserving, protecting their wealth as we navigate through, a very, very difficult time ahead. What's the strategy now?
The strategy now is very simple: gather information, stick to tangible assets. And now we are saying oil market is coming back. Gold is still in the appreciating mode. Real estate will continue to jump up. For Canadian investors, you have to understand immigrants are coming, demographics are changing, not enough supplies. Demand is here, supply is here. Obviously, prices will go up. Whether it's rental market, whether it's investment, whether it's capital appreciation, Canadian market will remain hot. Whether interest rate go up, no problem. Even if interest rate it touches 3% in Canada, in my opinion, real estate market will continue to boom. There might be some, short term slowdown in the market, but long term, I am quoting Yousaf Iqbal, 1.2 million people coming in Canada in the next 3 years. So how are you going to accommodate 1.2 million people? Are they they will be sitting on roads? No. They are all educated crowd. The educated crowd is coming. And once the educated crowd comes in, they need some housing, proper housing. So I think you have done a good job in strategically pointing to some key projects where demographics, where school colleges are nearby, when offices are nearby. I think Canada will remain on the investors' radar. And the Canada for whenever I talk about Canada, even in Cambodia, people talk about Canada because a lot of people they have migrated from Cambodia to Canada. So
That's right.
there are a lot of Canadian banks in Cambodia,
Yeah,
by the way.
yeah,
One thing I like about Canada, macroeconomic stability. And this is what I said about Cambodia, that why investors are coming to Cambodia because of one factor, macroeconomic stability. 10 years, nobody knew about Cambodia. Now everybody is talking about Cambodia. Canada has really positioned herself in the global market. It's a very stable country. A lot of countries are facing gas problem. Look at UK. The gas and oil prices have jumped 150%, and after October there is a 80% of jump in gas prices in UK. in one of your questions, I don't remember, you said inflation is going to hit 18% in UK
Yeah,
according to the latest report of Citibank.
yeah,
So
yeah.
imagine 18% inflation in the country and your income is not right. Your salary is not going up by 18%,
Wow.
but
Yes.
inflation is up 18%. So how are you going to cope? So you have to save money, you have to gather information, you have to see so many things, where the sovereign wealth funds are going, where are they investing, where the pension funds are going, what the government is going to do for housing market. Is affordable housing coming into the market? What is the price of cement? What is the price of copper? Copper prices have started rising again. Coal prices have started rising again because a lot of power plants in Europe, they are moving away from gas because gas is getting very expensive. Europe is on the brink of tough times. They're already going through a lot of recessionary phase right now. So I think Canadian investors are very lucky that government has done, the Prime Minister Trudeau, he has done a good job in maintaining stability. And most importantly, it's all about consumption. I don't know, but my friend Adil Hayat Ansari has told me a few times that restaurants on the average are 50 to 70% full in Canada. So that shows people have confidence for tomorrow. Yes, there is a slowdown globally in US, in UK, in Europe, Japan, China, but overall, Canada is still one of those markets where investors' interest remain very very strong. So when investors' interest remains strong, that shows the quality of that market. That shows the key perception about the market, that how Canada has positioned in a way that despite the global economic fragilities, investors are still going to Canada and they're still investing in Toronto and Mississauga and Calgary and Cambridge and all those beautiful places which where prime locations have gone up. And according to Economist magazine, as of this year and last year alone, the average home price in Canada is $1 million. So everybody who has got home in Canada is a millionaire now.
You're absolutely right on spot on that, Shan. Just coming up some of the points you just now very well raised, the supply and the demand part of it, and that's what we are seeing right now. The rental market has become suddenly very, very hot. All of a sudden we're seeing multiple offers coming on it, and within a month and a half time, you're seeing the rentals going up on that. Again, it is directly due with the supply and demand, and then when we talk to our some of the developers, especially like people like Tidal, Momentum Home, and Pigeon Bush, who've been in business for like 70, 80 years, 100 years. And they said, you know what, there is still not enough supply. Even if they want to start doing it today, they cannot just keep on supplying and keep manufacturing. It's not like a manufacturing plant that you start building up houses immediately on there. It doesn't work that way on there. So it takes a process, it takes a time, it takes effort, and go through all the bylaws and stuff like that. And at the same time, you're right, the cost of construction going up as well on that. So I totally 100% agree with you that from the Canada perspective, yes, it is positioned itself very well, even in this difficult time. People who are holding on to their assets right now, people who are investing into their assets right now, that they're looking at it. Just to give you a little example to our audience, even in today's market, Sean, I was just doing with one of my clients, and we were just looking at a property about a couple of weeks ago. 24 offers came on a property. It was listed for $1 million. It went for $1.2 million in today's market, where everybody's talking about the interest rate hikes and things like that. There was 24 offers came in. So I always say that if that one person got it, there's still 23 active users in the market looking around for the properties on that. I mean, this is just
Yes.
a very small example I'm giving you for a very small, not only from a city, but from a small, the county I'm talking about on this. So you imagine the way the whole city is growing up on that. So yeah, you're absolutely right, spot on that. Thank you very much, Sean. Anything you would like to add before we say bye to our audience?
Thank you, Yusuf. Thank you. As always, it's always a pleasure talking to you and sharing my insights. And I hope investors, the sophisticated and smart investors who are following IQI Canada, they can leverage from our talk and they can benefit. And we at Juwai IQI, we are quite obsessed. We want our investors to stay ahead of the market by 2 to 3 quarters. So the newsletter is very important. Keep sharing the newsletter with your valued clients so that they understand what is happening in the market. As we always say, we want our clients to stay ahead of the game.
Thank you very much, Shan. It's always a pleasure having you with us on the show, and we always will thank you for your value insights as well. With this note, everybody, please take care of yourself. Stay safe, and please follow Shan Saeed on Facebook and LinkedIn if you really want to know what's happening around the world. Thank you so much, Shan. Take care, everybody.
Thank you.
Bye bye. Bye.
Bye bye.